Hello guys. Today, I will share with you the statistics of 1,357 times MACD EMA200 backtesting. This trading strategy is very simple, but the result is quite surprising. We only trend with trends, and using EMA200 trend line as a filter, when the price is above EMA200, it is an upward trend. We only trade long, when the price is below EMA200, it is a downtrend, we only trade short. Then we use the MACD as a trigger to open a position. When the MACD line crosses the signal line from below, we long. When the MACD line crosses the signal line from above, we short. This trading strategy can be used on different time frames to trade stocks or forex, but it seems to do better on a 30 minutes time frame. Besides, you should have an exiting plan to protect your money. Any transaction needs to set a profit-loss ratio. You can find tools in tradingview.com for profit-loss ratio. Use a long position as an example. Stop loss is placed slightly below the EMA200 trend line, or an obvious support line such as a previous swing low. Use this stop loss in pips as the base to set up the take-profit ratio. Say if your P&L ratio is 2 to 1, the stop loss point is 100 pips, then your take-profit point is 200 pips. Although everyone is very familiar with the MACD, but sometimes it might be used in the wrong way. Before showing you the results, let's take a look at the principle of MACD, so that you can use it correctly. On this chart, you can see the default parameters of MACD are 12, 26 and 9. This indicator uses EMA12 and EMA16 to calculate MACD. The blue MACD line below is the result of subtracting EMA16 from EMA12. The orange signal line is the result of a 9-day exponential moving average of MACD. The histogram is the difference between MACD and signal, which is subtracting the signal line from the MACD line. It is an indicator of momentum. If this histogram above the zero axis, it means the price on an upward trend is strengthening. If it is below the zero axis, it means the downward trend is strengthening. Generally speaking, when MACD crosses the signal line from below, we buy. When MACD crosses the signal line from above, we sell. But if you just trade like this and ignore the trend, you will lose money. The statistical results later also prove this point. On YouTube, I saw doing the MACD test first on the Trading Rush channel. Some other YouTubers do backtests afterward. I'll put links to these videos in the video description. If you are interested, you can go and see for yourself. Now, let's look at the statistics. Various data are listed on this table. These data are collected from all the MACD 100 times backtests on YouTube I can find. We can see that they use different trading tools, the timelines are different too. But 15 minutes and 30 minutes time frame are most common. Most of them have backtested at least 100 times. Besides, most of them have fixed profit-loss ratio. This table also lists the number of winners, number of losses, win rate, profit margin, and if they are trading on trend. What we care most about in this table is the win rate. As you can see, the overall winning rate is quite high. Overall a 52.4% win rate, and the profit margin is 23.5%. The result of trading with this strategy is pretty good. Note, the win rate of the last video in this table is relatively low. The profit margin is also very low. There are two main reasons. First of all, he is not a trending trader. It's very common when one uses the MACD with no trending filter. At the same time, he has no fixed profit-loss ratio. He uses the MACD crossover for entry and exit signals. It means he does not control the risk at all. So his result is the worst among others. The table may look a little messy, so here is the summary. 1. The total number of transactions is 1,357 transactions. 2. Trading tools are forex currency pairs, ETF and cryptocurrencies. 3. Most of them use the 15-minute time frame for trading. 4. The profit-loss ratio is set to be between 1 to 1 and 3 to 1. In general, 711 wins out of 1,357 transactions, equals to 52.4% win rate. If you only calculate the 15-minute time frame for trading, the win rate is 53.7%. The win rate of trading with a 30-minute time frame is 51.2%. These ratios show that if the profit-loss ratio, ignore transaction fees, you can break even for the trades. 5. The overall profit margin is 23.5%. If you're trading with a 15-minute time frame, the profit margin is 18.8%. Why is this profit margin so low? The reason is the aforementioned. Trades with no risk management will turn down your profit. If we excluded those trades when using the 15-minute time frame, the profit margin is about 26%. If you use a 30-minute time frame, the profit margin is 29.1%. Therefore, using the 30-minute time frame you can get a higher profit. Although the win rate and profit are good, you should notice this strategy also has blind spots. Here is an example. You can see the stock price after rose sharply and fell sharply in a short time. From the overall trend, it's still in an upward trend, which is the price is greater than EMA200 line. If you check the MACD, there is a buy signal. But you will find that the price is at the highest point when the signal is triggered. So this trading strategy is not suitable when prices fluctuate sharply in a short period. I am going to do some more backtests afterwards. After finishing the tests, I will share the results. That's it for this time. If the video is useful to you, consider subscribing to the channel, like, and share with friends. See you next time.